Okay, we can start now. So,
Okay.
Anuj and Asta, are you
Yes, sir.
ready?
Yes, sir. Is my screen visible, sir?
Yeah, it's absolutely visible. Yeah.
Okay. So, good afternoon, everyone. Today, me and Anuj will be presenting on the topic reverse charge mechanism and ineligible or blocked ITC.
Okay.
So, this will be the flow of presentation. Starting with what is reverse charge mechanism? The reverse charge mechanism is a process of GST payment by the receiver instead of the supplier. In this case, the liability of tax payment is transferred to the recipient receiver instead of the supplier. So these are the three cases in which the reverse charge mechanism is applicable. First one being the imports purchased from an unregistered dealer, supply of notified goods and services. Now we will be understanding about the differences between the normal charge mechanism and the reverse charge mechanism. So the normal charge or the forward charge is where the supplier pays for the GST to the government instead of the buyer. An example for this can be when a regular taxpayer sells the goods and issues an invoice, collecting and remitting GST to the government. On the other hand, in case of the reverse charge mechanism, when a buyer buys a product or a service is rendered by the supplier to the buyer only makes the payment for the value of the good, and the GST is paid by the buyer directly to the government.
Okay.
So the GST rate of 5% or 12% is applicable on the basis of admissibility of input tax credit by service provider, and that is the goods transport agency. So if I talk about the input tax credit means at the time of paying the tax on output, you can reduce the tax that you have already paid on the inputs and pay the balance amount. So, for example, when you buy a product or service from a registered dealer, you pay the taxes on the purchase. On selling, you collect the tax. So, you adjust the taxes paid at the time of purchase with the amount of the output tax and balance liability of the tax.
Very
So,
good.
it has to be paid to the government. So, this mechanism is called the utilization of the input tax credit. Now, talking about the invoicing and the reverse charge mechanism. So, under the reverse charge mechanism, the recipient or the buyer of the good or services issues an invoice on receipt of good or services. So, this process is called the self invoicing method, wherein the buyer would issue an invoice to himself or herself, and yeah. So, this is how the entire method works. Okay, now talking about the time of supply under the reverse charge mechanism. So under GST, the time of supply means a particular point in time when the goods or services are rendered or supplied. So it allows us to find out the tax rate value and due dates for filing the returns. Under the reverse charge mechanism, the receiver is entitled to pay the GST. However, the time of supplying of goods and services under reverse charge mechanism is varying from the suppliers which are under forwarding charge. So in this case, in case of goods supplied under RCM, the following dates are followed: the date of receipt of goods and also the date immediately after 30 days from the date of issue of an invoice by the supplier. But in case of services, it is the date of payment and date immediately after 60 days from the date of issue of invoice by the supplier. Now talking about the input tax credit under reverse charge mechanism. So in this case, the service recipient can avail input tax credit on the tax amount that is paid under the reverse charge on goods and services. The only condition is that the goods and services are used or will be used for business purposes or business purposes only. And if the composite dealer falls under the reverse charge mechanism, then the dealer is ineligible to claim the credit of the tax paid. So the tax will be paid at the normal applicable rates and not at the composition rates. Okay, moving forward to what is income tax and what are its types. So income tax refers to a percentage of your income that you are liable to pay directly to the government of India. So there are two types of taxes, the direct tax and the indirect tax. The direct tax are applicable to the income that is earned by an individual. There are two types of direct tax, income tax and the corporate tax. Now, if I talk about the indirect tax, this is the tax that is levied on the consumption of goods and services, not directly or on your income. For example, the manufacturers, wholesalers, and retailers collect these taxes and pass them on to the final consumer. So these are some of the entities that are liable to pay the income tax in India.
Okay.
Then there are two types of taxpayers, who are the residential individuals and the non-residential individuals. So the residential individuals are required to pay the taxes on their global income, encompassing earnings both in India and abroad. And the non-residential individuals are obligated to pay the taxes solely on income earned or accrued within India. So these are the types of income and types of income under Income Tax Act. First one being the salary, house property, business or profession capital gains, and other sources. So the salary would include the compensation from employment, including perks and the bonuses. House property would include the rental income from the own property, and so on. These are the tax slabs rate under the new tax regime.
Okay.
So these are some of the key features of the new tax regime for the financial year 23 and 24. First one being the tax rebate. The new tax regime introduced a full tax rebate on income up to 7 lakhs. This means you need to pay the tax if taxable income is below this threshold of 7 lakhs. Now, standard deduction. A standard deduction is of rupees 50,000 for salaried taxpayers under the new tax regime. The surcharge reduction means the reduction of the higher surcharge in the new tax regime to 25% from 37% for those earnings of over 5 crores, resulting in a decrease in their tax rate from 42.7% to 39%. Default tax regime. The new income tax regime is the default, but the taxpayers have the option to choose the old regime. Leave encashment increase. Leave encashment for non-government employees is increased from 25 lakhs to 3 lakhs. Now talking about the TDS rate reduction. The TDS rate reduced from 20% to 30% on the withdrawal of EPF.
Okay,
Employment.
Asta, just one thing. You said there
Yes.
is a old regime and there is a new regime. Okay. So
Yes.
can you tell me what is the difference? Why, the government has brought a new regime?
Uh,
And any major difference between the old regime and new regime? And any, I mean, some feature?
Yes, yes, sir. One of the reasons that government introduced the new tax regime is to reduce the complexity in the tax structure, and we
Okay.
have and we have included the details in the further slides for the same.
Okay. Sure.
Yes.
Go ahead, please.
Okay, so these are some of the income that are not covered under the income tax slab rates. First one being the stocks. So for a stock to be considered as a long-term capital under the long-term capital gain tax rate, the holding period should be more than 1 year. And on the other hand, if I talk about suppose gold, for that it is around 3 years. So if the holding period should be 3 years, then only the gold would be considered under the long-term capital gain tax rate. Otherwise they would be charged on the basis of the tax slab rates only.
Okay.
Okay, so these are some of the ways in through which the income tax is collected. First one being the TDS, so deduction of tax by the payer for specified payments to the recipient. Employers, banks, and other payers deduct TDS from your income at the time you make your payments. For example, your employer would deduct TDS from your salary and deposits it to the government.
Okay. Good.
Now, if I talk about TCS, so the TDS is charged on your salary, whereas TCS is charged on certain transactions, such as sale of certain goods or the payment of rent that you make. For example, if you sell a property, the buyer may be required to deduct TCS from the sale price and deposit it with the government. The second one being the voluntary payment by taxpayers into designated banks. So this is where you calculate your own tax liability and pay it directly to the government. You can do this online or through designated banks as well.
Okay.
Moving forward, Anuj will take over.
So from this slide, I will be taking you through an example. It will be covering some like this is the basic salary and salary structure of a person, and then we will be covering the particular gains that he will get from interest or things. So we have taken both old scheme and new scheme for making the difference. But there are there are no deductions in the new tax regime according to the new tax regime, and there are certain deductions which we have mentioned as in the basic salary there will be no deductions, special allowance not applicable, and in the similar format for HRA and other things as well. So we can conclude that gross income, taking into account the deductions in the old tax regime, it will be 16 lakhs 50,000, but the taxable amount for the new tax regime will be 20 lakhs.
Okay, just
So
hold on, just hold on. So you
yes,
says
sir.
that the total income is 12 lakhs, basic salary, special allowance, you're getting 2,52,000. That is the same in both old as well as new.
The
But in
old
case of
and
an HRA, you're allowed deduction under the old scheme, so that's why you're paying less. Okay,
yes, sir.
and you have to pay, there is no HRA deduction under the new scheme, so that means the whole of your HRA will be included in your income.
Including
Okay,
the
and
new tax
EA
regime.
is again, deductions.
Deductible
Okay,
deductions are there.
okay, fine. Standard deduction under the new scheme. Okay, and
Standard deductions will be there from in the old tax regime, so those will be taxable. But since
okay,
there are no deductions for the new tax regime, so it is not applicable for
okay.
that
So that means the gross income will be higher in case of the new regime. Yeah,
new
go ahead.
regime.
Okay,
Yes, sir. And covering further, in order to calculate the income tax, first I'll explain you the theory. The theory will be the rental income or the interest which is paid for a home loan, salary and everything. This is mentioned. So taking you to the example finally, covering the last two paragraphs. If you receive, let's say, if you receive 8,000 interest from savings account and 12,000 interest from your fixed deposit, to reduce your income tax, what you will do, you will invest it somewhere. So let's say if you invested 8,000 as an LIC premium and 12,000 has been paid for medical insurance, then the following will be the tax deductions, and these will be the tax deductions.
okay,
Like for uh, there are three categories, section 80C and section 80 TTA and section 80D. And for these three categories, the total maximum deductible amount is 1.5 lakhs for 80C, and for the following two are 10,000 and 20,000 25,000 for self and 50,000 for your parents. But what we claimed were 8,000 and 12,000, which I mentioned in the previous paragraph.
okay,
Yes, sir. Yes, sir.
okay,
And so, since there, coming to the previous slide, uh, the amount was 20 lakhs in the new tax regime. So, taking into account that only, why should we go for new tax regime if it is high, or to make a contrast or to make a debate? Then these are the particular slabs. For up to 3 lakhs, we are exempted from the tax. More than 3 lakhs to 6 lakhs, it is 5%. And in the similar format, the total taxable amount, like total tax which we are required to pay, will be 3 lakhs 25,104
okay.
according to new
New
tax
regime.
regime.
Okay,
Yes, yes. And this is what we covered. 20,000 is what we derived in like our derived income from other sources, 8,000 and 12,000, and we have added both of them. And total gross income will be 20 lakhs 42,000, and amount taxable are 3 lakhs 25,000.
okay.
Yes, sir. This was the example for
The
explain.
new regime. Old regime में क्या हो?
Old regime is
You
mm,
calculated the tax under the old regime also? No.
did we? No, we calculated the total gross income, but
अच्छा,
not the.
आपने tax नहीं calculate करा. Okay. To
Yes,
just to understand, where
yes,
you're
sir.
paying more, where you're paying less. So that was the only
Uh,
reason. Okay.
yes, sir.
ठीक है.
We could have. Yes, sir.
Okay, okay. ठीक है. चलो, no issues.
But so covering like coming to the final topic of our presentation today, the third topic, it is ineligible ITC under GST. There are four kind of ineligible ITC. First is motor vehicle and conveyances. So for motor vehicle used for transportation of passengers having capacity of 13 or less than 13, including the driver, uh, like it is not eligible for the ITC. But vehicle purchased by driving schools or vehicle purchased by car dealers for sale, those are eligible as per some exceptions.
Okay.
And the second category is services for general insurance and servicing, repairs and maintenance. So, when coming to the example, if we are a general insurer of motor vehicle purchased for personal use, then ITC is not available. But if we repair or and the amount is expended on maintenance of vehicle used for driving school or these kind of things, then ITC is available. Again,
Just
the
hold on. Yeah. Actually, what happens is that you're saying that, when you buy a motor car, for a certain, I mean, like 13% or less, then you're not eligible for GST tax credit. Okay.
Yes,
So
sir. Yes, sir.
similarly, if you insure these cars, okay, अब इसी
Yes, sir.
इसी cars को whether you're using for personal purpose or whether you're using for official purpose doesn't matter. You're not eligible for input credit on motor car, as well as taking an insurance cover or repair and
Yes,
maintenance you're doing for the car. So, and if you're paying GST on that, so there'll be no input credit for that. Okay.
yes.
So as you said, for the I mean personal purpose, it's not per personal. It can be both official. Fine.
Official as well. Okay.
हाँ, तो आपने अगर गाड़ी खरीदी है तो आपको जीएसटी नहीं मिलेगा। गाड़ी को मेंटेन करोगे, गाड़ी को इंश्योरेंस कराओगे और उसके ऊपर आप जीएसटी पे करोगे, यू विल नॉट बी एलिजिबल फॉर इनपुट क्रेडिट। सो दैट इज व्हाट द लॉ
Yes.
सेज। बट ओनली इफ द कार इज बीइंग, आई मीन, परचेज्ड by learning, a motor, I mean, car, I mean,
Driving school.
there's a business of, I mean, of, selling cars, or, you're providing some kind of learning a motor
Yes, sir.
vehicle, this thing, then those are the businesses where the input tax credit will be applicable. Okay,
Yes, sir.
eligible for those. I
In
mean,
ITs.
yeah.
Yes.
Okay.
So the third type is supply of food, beverages, outdoor catering, beauty treatment, health treatment, and cosmetics.
Okay.
So
Just give
for
me an
these,
example. हाँ, example है आपका, चलो बताओ.
yes, example is there. Let's say ABC Limited used outdoor catering services for its annual function, then ITC is not available.
Okay.
But if beauty products are bought by a salon, and then ITC is available for
So
that.
if I ask you a question, suppose you are working in an office, in a company, and your company orders, pizzas from the Pizza Hut, for
Yes, sir.
say all the people who are there, and they spend about 10,000, and on that they have paid, suppose, 500 rupees as a GST. Will the company able to take an input credit of that 500
No,
rupees they paid? No. Yes or
no,
no?
sir.
Okay.
For that, it is not available.
So this is what you are covered here. Okay, fine.
Yes, sir. This is it. And the last type of example is like construction of immovable property on our own account.
Okay.
So let's say XYZ Limited hires ABC contractors, some contractors for construction of building. Then ITC is not available. But let's say XYZ is buying a like motor for machinery or machinery. Then the for like for that particular machinery, the ITC is available.
Okay. So XY Limited buys a motor for machinery. Okay, fine.
Yes.
Okay, now this means, like, suppose a company is buying, for example, if I ask you a question, suppose a company has bought some tiles, okay,
Some
and
pardon me, sir, again.
suppose a company has bought some tiles,
Yes, sir.
which they're going to use it in their washrooms, their office washrooms and all, for about say 5 lakh rupees. On that, they have paid, for example, say 60,000 rupees as GST. Will they be eligible for input credit of that 60,000 rupees?
Mm, no, sir. It will be in the first. It will be like the first example that.
First example, okay. But
Yes,
of
sir.
course, if they are buying a motor for a machine, as you said, so whatever GST they are paying, so that for that it will be eligible. Okay, you are saying that. Okay, fine.
Yes, sir.
Because the
Yes, sir.
motor is for the machine, it's not for
Machinery,
construction purposes.
not for construction.
Okay, go ahead.
Yes, sir. And this was all that we covered. We covered three topics in total.
Very good.
And thank you,
So,
sir, for the
Artha and Anuj. So,
yes
how was the, Anuj, because of course you have taken this course as a audit
audit.
one, and Asta, so how do you find, I mean, both of you, the course? I mean, did you add some value? You learned a little thing, or you had some prior knowledge about this subject?
No, sir. To be very honest, I had no idea about GST and how it works. So I feel it was a really good course, and I got the practical knowledge of how actually GST works in a actual business scenario.
Okay, okay. Because I found that, when you are explaining, you were able to, explain it very well, as if, you know it everything. So I think you've done a good job by, understanding the subject. Of course, subject is very vast. It's very
Yes.
difficult for to, master these subjects so easily. But did you find it was a kind of a good distinct topic for you?
Yes. So for me, I was about to take it as an elective, but since my all core courses have been like all elective credits were completed, but
Uh,
I still wanted to pursue a course under you.
uh,
So that's why the only option left with me was in taking an audit course.
okay, okay,
So
good.
that's why it was an audit, but
So,
I thoroughly enjoyed it, and it was like
okay, okay.
it
So
was
only thing
nice.
was, the course was so vast, it was very difficult to cover each and every aspect. And
Yes.
there was so many things else to be covered, but the time went off, and so we couldn't do much. But we covered, I think, I mean, the most important
So
parts of
we,
our.
so we covered most of the topics, and I guess all of the class enjoyed it.
Okay,
So
wonderful. So at times I was feeling, because it's a, it's a law, and it there are so many provisions, there's so many things, so it's very difficult.